Welcome to the Divorce Survival Guide podcast, where we have open and honest conversations about co-parenting, separation, divorce, and the hardest question of all, should you stay or should you go? I'm Kate Anthony, your Divorce Survival Guide, and I'm here to help you navigate some of the roughest waters you've ever swum in and answer some of your toughest questions. I've been to hell and back. And now it's my mission in life to help you get to the other side of this process with your sanity and your heart intact.
Hey everyone, welcome back to another episode of the Divorce Survival Guide podcast. I'm so glad you're here and spending this time with me. Today I have a great episode. I think I'm just going to get into it. I have nothing to tell you about my life today. I really don't. I wish I had something exciting and interesting to tell you, but it's just been such a shit show in the world. And so I'll just let it speak for itself and we'll just get into the podcast. So today I have Kimberly Nelson returning. You may remember her. She is a financial advisor. She is a CFA and a CDFA, which is a certified divorced financial analyst. And she is coming back on to discuss financial resources and strategies to help you maneuver through divorce and debt, specifically during COVID-19. Because this pandemic, you may have noticed, has created an uncertain financial time for a lot of people. And this may be affecting or may affect in the future any support arrangements that you may have. So there's a lot of great information in this episode today. Kimberly she's just a whiz with all this stuff, money, and the way that she really breaks down so much. I learn so much from her every time we talk because she just has it all organized in such a way that it's really easy to digest and it just makes a lot of sense. Like I said, I learned so much. There are things that I've never understood about finances, and I'm like, oh, that's what that means. So there's a lot of that in this episode. And so Kimberly has been working with high net worth divorcees in the LA area for more than 15 years. And the beauty of her is she really does understand the challenges that women face when navigating an overwhelming bevy of attorneys, accountants, insurers, and other advisors during the divorce process. Kimberly's team, she works at a company called Coastal Bridge Advisors, and her team there really pride themselves on their ability to organize all the advisory elements in a coordinated manner and ensure that the advice that their clients receive is clear, constant, and in the best interest of the family or the individual. And that's exactly right. I always feel when I speak with Kimberly that her advice is clear and constant and really puts the kids at the center and the holistic family first. So I'm going to leave it there. I'm going to just shut up and stop talking and bring you my interview with Kimberly Nelson. Kimberly, thank you so much for coming back. This is, I'm so happy to have you on here and talking about.
Yeah. Thank you for the opportunity. I love doing this with you and I enjoy it so much. Thank you.
Yeah. So we're talking today about sort of the trifecta, a bit of a trifecta here, right? Debt and your divorce and the pandemic.
Correct. That's a lot of issues all at once. So
yeah.
A lot of empathy out there for those of you that have all three of those things weighing on your mind right now.
Yeah, absolutely. So, this is it's an uncertain financial time for so many people. We've got people who are furloughed. We've got people who have lost their jobs entirely. We've got, just instability. We've got people losing, their portfolios falling apart, right?
Yes.
There's a lot of financial instability. And also the interest rates have plummeted, which, could be good from a debt perspective, from a borrowing perspective, right? But
holy cow, it's just a lot to process, I think.
It is a lot. It is a lot. And I think that, on the list of things that can upend even the best laid plans, this coronavirus pandemic might just be at the very top. So I don't think any of us could have seen this coming out of left field the way it did in February, March of this year. Pretty wild. And going through a divorce during this extra tumultuous time certainly adds a layer of complexity. And, if homeschooling kids and learning how to look decent for a Zoom call like we are right now, Kate, and
full disclosure.
Exactly. And
full disclosure. We're not.
And making sure that you have enough toilet paper on hand before you head out of the house with your mask to try to find more. There's so much going on here and a lot of stress around all this. So I think that focusing on debt during a divorce while you're dealing with all of this, it's a very timely discussion topic.
Yeah, so. Absolutely. I mean, it's insane. Okay. So, the first thing I think that I want to touch on is, a lot of people are relying on spousal support or child support that is based off of a particular income disclosure that may or may not be, or you're either receiving it or you're paying it.
Absolutely.
Based off of income that you may or may not be receiving, or your partner may or may not be receiving right now.
Absolutely.
So what do people do? Like, let's say you're receiving it and it's not coming, or your ex-spouse is like, I don't have it.
Mm-hmm. Yep. That's a good question. So first, it's worth noting, I think first, Kate, that, if you have experienced a significant change in income and you're the payer, maybe, your first instinct might be to call your attorney and immediately seek a modification. Things have changed. My circumstances have changed. I need you to let my ex-spouse and her attorneys know, and we need to modify this now. That case is not going to be heard for probably a period of several months at this point. What I'm hearing from a lot of the attorneys that I work with right now is that they're only hearing two kinds of cases right now. One where there's abuse happening in the home, and they're talking about those cases, or if there's been a child kidnapping and the child is gone and missing. So anything else is not an emergency as per the court right now. So It's going to be up to you and your ex-spouse, at least for the next few weeks, to try to work this out, unfortunately, on your own. So I'm going to give you a couple of tools here that I think could be helpful. And keep in mind that everything that I'm saying here, your order that is in place by the courts right now that you've either agreed to or it's been mandated, that supersedes any agreement that you and your ex-spouse or soon-to-be ex are creating on the side. Okay, you're going to create something on the side that hopefully works for you, and then you're going to seek remedies later on this. But for right now, if the income declaration that you are paying support based upon is not true anymore and you are the payer, communication number one is the first thing. Communication.
Communicate with your ex or soon to be ex, not first with your attorney, not first with the courts, but with directly to the person that this transaction is with.
Absolutely. Exactly. And, again, this communication, even if you get your ex-spouse or soon to be ex to agree, that does not mean that it changes your agreement that you have, codified in writing through the court system. But it just means that this is how we're going to survive for the next, few months together until we can find a place where we can, sort of catch up on what's gone on in the past. But, sitting down with them as soon as possible. It's funny, Kate, if you think about all the times in your life when you've been angry, when something has made you angry, it really is only because the thing that you thought was going to happen is not the thing that happened.
Yeah.
That's really the definition of anger. So if you're worried about your soon-to-be ex becoming angry because they're not going to be receiving that support, if you communicate, you're really going to keep them from getting to that place. And they're going to understand that we're in an unprecedented time, and they're feeling a lot of stress and strain as well. So just sitting down and making the kids your focus. If you've got children, number one, taking care of their needs and discussing with your ex how you're going to do that together.
And I would just to sort of interject here about like how to do that communication, right? Because that's my wheelhouse, right? And so,
yes,
if first of all, if your spouse or ex-spouse comes to you and says like, I need to talk about this. This is like, while it may be scary, right? If you can sort of be as open and generous as possible, right? Because we're all suffering together, right? And what they tell you may be really terrifying because you may rely on this as income, obviously, right? Many of us do. You're sort of just to sort of hear that and hold it with a generous spirit. And similarly, if you're delivering this information, be empathic to how it's going to land, right? To the sort of panic and terror that you may be sort of sparking in someone else. And so, I know that when people are concerned for how something may land for another person, they sort of become preemptively defensive.
Yes.
Or sort of, it doesn't have to be that way, right? You can say like, listen, I need to talk to you about something. This is really hard. It is hard for me to come to you about this, and it's going to affect all of us. And how can we, as a team, figure out how we're going to get through this together? Because you are a team, you are a family, and if you look at it that way, you're more likely, if you engage your ex in a partnership about how to handle this, as opposed to, I don't know what the fuck to tell you, I don't have it. You say that, you're like, I don't know what to tell you, lady, sorry, I don't, or dude, like, I don't have it. So, what the fuck are you going to do? You can try and get, you can't get blood from a stone, right? Like,
right. Mm-hmm.
That's not, that doesn't create an environment of generosity. And this has to be generosity and empathy in both directions.
Absolutely. And that's such a great point, Kate, because, whenever you are asking for something from somebody, which in this case, you're going to ask somebody to take less money than they're used to, or, you're going to ask somebody to please keep paying, at least a certain amount so that you can get by, and being able to come to that discussion with an empathetic heart and a spirit of compromise is going to get you so much further than, putting up the defense and going on the attack when you feel like you're not getting your way. And, again, just because you agree now to something temporary does not mean that you are not going to be able to retrieve the rest of what you should have had during these months if you're the one receiving. But giving your ex-spouse some time to get back up on his or her feet. They may have gone through a job loss. There may be something else. And likewise, if you're the one that's paying and you think that this is not temporary and that your job won't stabilize, well, when you do ultimately have your modification heard by the courts, it will be made retroactive to the time that change occurred. So just, again, everybody hang in there together and try to get through this period of time until we can get the legal professionals to sort it out ultimately in the end. So that's number one. And in that same vein, preparing for a drop in income, whether you are whether you're the payer or the payee, preparing for a drop in income, take a look at your monthly bills. How many of them are fixed and how many could you eliminate if you had to? How much is debt repayment and how much is discretionary spending? If you can answer these questions, it will determine how difficult or easy it might be to cut back on some living expenses if you're facing a drop in income. So it's a great time to revisit that budget, knowing what your debt obligations are and how to contact your lenders to discuss various relief options, such as a refinance or forbearance on a loan, a credit line, et cetera. We'll get into all of that, of course, but that's very important. And again, if your job is cyclical in nature, then make sure your resume is up to date and make sure you're still actively networking through social media or other means. You'll want to be prepared to hit the ground running if you're getting laid off, and creating that game plan now will ease some of the anxiety as well going forward. So just make a list of the things that are in your control and what you can do, and just focus on those every single day.
Yeah, such great advice. Really such great advice. And I also want to, while this may be like super inconvenient and super scary and all those things, at the end of the day, what you really want to remember is like, if the money doesn't exist, you're not going to get it. Right? Like,
that's right. I mean, what you said a moment ago, you can't suck blood from a stone. That's so great. Right? Absolutely.
Like, if it's not there, like, I'm sorry that this was the promise, but like,
yeah, exactly.
we're all struggling right now. So anyway, I mean, I just, and I love that, redoing a budget, like really rethinking, like how can you, refinancing, like you're going to be dealing with some really complicated reorganizing, which is hard and scary, but might also help you out in that process, like you said.
Absolutely. It's funny, Kate, I've been hearing this phrase a lot lately. I'm sure you've heard it a little bit too. We're all in the same boat,
Yeah.
And it's been floating around on social media and other means too. Someone had a really interesting perspective on this. We're not really in the same boat. We're in the same storm, but we're all in very different boats.
Thank you. I'm very glad you said that.
So as we all weather the same storm here, some of us are in super strong naval quality vessels ready to, wage war on this coronavirus pandemic and making that bumpy ride feel pretty darn smooth. And others are in rickety dinghies that are taking on water and are going to be left extremely vulnerable to the effects of this devastating storm that we're in, which is the pandemic. Right. And, I'd say that the hull of your boat really is your debt load. In my opinion, your debt load is going to quickly allow your boat to float or sink before anything else, in my opinion. And so that's why I thought it was so important for us to address this today and talk about it a little bit.
So what if someone's carrying like a ton of debt, right? Like, and they're, they've been managing, right? They've been making payments. They've been maybe, paying the minimum, but like they've been managing it.
Yep.
And now they're in a position where like kind of the only way they can get by is to actually like possibly incur more debt.
Yep, that's true. And so that can be the case. And, and first of all, again, as it relates to your pending divorce, you want to be keeping debt lines separate if you possibly can. Okay, keep that in mind. But, if you do need to take on more debt because you don't have the cash flow coming in, credit cards are probably your last option. It's the easiest and probably the one we reach for the fastest because it's just right there in our wallet. But, looking at a line of credit potentially, or if you can refinance a mortgage and take a little cash out, that's a great idea also. But that can be a little bit trickier given that income levels have dropped. It may be a little harder to qualify right now for that. So a credit line, like a home equity line of credit, or if you do have an investment portfolio, interest rates are very, very low right now. So you can take a variable interest loan against a portfolio for an interest rate that's very, very low. I mean, we're talking somewhere in the 1 to 4% range and somewhere in there. So very, very low. And that'll get you through. Managing debt can be a very tricky business, during this time. And so you should start making a list of your current debts. And it's important to note which debts are personal and which debts are community if you are going through a divorce. All of these debts need to be focused on. They need attention. And if you can make the minimum payments, you must continue to do so. But making sure that your debts are separate from your ex-spouse is probably key at this point. Just so that.
And so how do you sort of delineate that? Like, because, isn't all debt community property at the end of the day when you're,
It's yes and no. Yes and no. Debt incurred during the marriage is definitely community property, but debt incurred post-separation, your attorney may be able to do something for you on that. If your ex-spouse is racking up debt and you're separated, then it's very, very likely that will be attributed to their side of the balance sheet when everything shakes out. So that's why right now, let's say you have a home together and you both need a little bit of cash, or maybe just one of you needs a little cash, it's okay to borrow off that home equity line of credit when those funds are wired into your personal bank account. Then there will be a paper trail showing who received that money. And so it'll be a little easier to tell whose is whose. But if you have debt currently though that you're working on tackling, the amount of the debt is less important than the terms of the loan as you're making that list. Revolving high interest rate debt should be your first concern. That's the credit card stuff that we talked about.
Right.
And with revolving debt, there's a difference between revolving and installment debt for anybody who might be confused about that.
Yeah. Say what that is, because I don't even know what that is.
Yeah, you bet. Revolving debt is where there's an established credit limit that you borrow against. So it's like a
Mhm.
credit card.
Like credit card.
And as long as you haven't hit that limit, you can keep borrowing. So, credit cards require a monthly payment. And if you pay less than the full balance, you'll be charged interest. And interest rates on credit cards can be very, very high. As most of us know, the national average right now is over 16%, but it can be as high as into the 30s, depending on your credit rating and your history and whatnot. So,
Portion.
yeah, absolutely. It's terrible. So, if you find yourself unable to make the monthly payments on your revolving debt, the advice, it's actually the same, whether it's installment or revolving, but call those credit card companies now. Almost everybody, Chase, Bank of America, Wells Fargo, whoever your credit card is with, almost all of them have some kind of structure that they are offering to their clients during this time, either a reduced minimum payment or a lower interest rate for a period of time. Any kind of deferral would be helpful right now. So most of them are offering that. So it's a good time just to take a quick look, see what you have, give your lender a call and find out what options are if you're feeling a little squeezed. Installment debt, I'll just define that quickly.
Yes, please do.
That installment debt is basically where you borrow a fixed amount in one lump sum. So unlike a credit card, you cannot keep borrowing as you pay off your balance. An installment loan has a predetermined end date. So it's like a mortgage. You take a certain amount,
Got it.
you have to pay back a certain amount each month. And then there's a finite end date in mind. So, mortgages, auto loans, student debt, things like that are all examples of installment debt.
Got it. Okay.
Mm-hmm.
Thank you. That's helpful. All right.
Mm-hmm.
Just talk to me about refinancing. Let's if somebody's in a situation where, cause we talk about refinancing all the time, like, oh, we're struggling. We should refinance. Like, should we? Like, is that like, what are the pluses and minuses? What are the drawbacks of refinancing, if that's an option, right? If that's an option.
Yeah. In terms of refinancing right now, there's no real drawback because in almost every case, your interest rate's probably going to be lower when you refinance today than it was when you took that loan because we're at historic lows. However, it can be tough to refinance. And of course, you may not want to have a new product, and refinancing to a new product might actually be more expensive for you. So, that could be a drawback, but
what does that mean, new product?
Oh, so mortgages come in many different shapes and sizes. So we have mortgages that are variable rates. You can have a three, like an ARM. Mm-hmm. Yep, everyone's heard of an ARM, and an ARM stands for adjustable rate mortgage. And so ARMs come in 3 years, 5 years, 7 years, 10. Then we have 15-year, fixed rates, 30-year fixed, all of that. If you have a variable rate loan that's coming due soon, you really do want to refinance. So if you've got if you took a 5-year loan back in, let's say, 2015, 2016, it's time to start looking at refinancing because that interest rate's going to reset. And oftentimes, even though rates have fallen, the rate it's going to reset at could be higher than what you took it out at. So refinancing to a fixed product today could be a great idea for you because 30-year rates are at historic lows. But to refinance, you've got to have income.
Right.
And you've got to have assets.
Right.
And so if that's not something that you think you could do, then another option on your mortgage would be forbearance. And I think a lot of people have heard this word forbearance, but don't really know what it means. I think most of us know what foreclosure means.
Yes.
But not forbearance. And those two things are extremely different. So forbearance is when your mortgage servicer, which is the company that sends your mortgage statement and manages your loan, or lender, allow you to pause or reduce your payments for a limited period of time.
Oh, interesting.
Okay. So forbearance has been a popular tactic in the last couple of months. So a lot of banks, are working with people to get this done. So it is not a shameful thing to call your bank and discuss a forbearance. I want to really make sure everyone feels confident and comfortable when they're doing this. You are not alone. There are a lot of people going through this with you right now. And so, do not be concerned about judgment or how someone else may perceive you. And, everybody has been through some kind of financial difficulty in their lives. I don't care who you are. Everybody has. The wealthiest people you know of. I mean, even Elon Musk. I mean, how many times has he been on the edge of bankruptcy? I mean, he seems very successful and whatnot, and he is. But everybody has had a time when they've had a little bit of financial insecurity. So, different lenders are offering different terms of forbearance. So just check with yours as soon as possible to find out what those terms are. So one example is if you've got a Fannie Mae or Freddie Mac or FHA, VA, or USDA loan, and it's okay if you don't know, you can call your lender and find out. It's okay. But you won't have to pay back the amount that was suspended all at once unless you're able to. They're actually making a lot of concessions to their clients. There's a lot that can go on there. Private lenders have some different rules, but keep in mind that it's in your lender's best interest to work with you as well. Lenders are not in the business of foreclosing on homes and taking real estate onto their balance sheet. That is not what they want.
And I want to sort of interject here that, a lot of what we're talking about here, a lot of these rules and laws and, financial sort of things really changed a lot after 2008 because, before 2008, and we were one of them, we were getting, no interest loans or, variable, right? So it was, they were selling you loans, 0 down payment, no interest for, the first 5 years of your loan or whatever. And, sort of tactics that like department stores use.
Yeah.
The banks were using, and then they had to foreclose. This is the house. This was the bubble. This was the burst of the bubble in the housing crisis, where all of a sudden people couldn't pay when your interest rate jumped from 0 to 15% or whatever it was.
Yep.
People couldn't pay their mortgages, and so these concessions, I think, are, as a result of, we've been through this wave once before, and now we have different ways of dealing with it. We have not created, this wave was not created by corporate greed.
Right.
Although that's debatable probably in some.
Well, that always seems to come into the equation somewhere.
Right. It's always in there somewhere. Right. We didn't handle it. We're not handling it well because of the corporate greed, but but we have now structures in place that we never had before to be able to manage these sorts of crises. So I think it's important for us to know that, like you said, there's no shame at this point.
No,
we've been through this before as a nation, and nationally we are dealing with this. The one thing that we kind of haven't dealt with. Because it wasn't necessarily applicable in 2008 or in the aftermath, was rent. And the rent. And I don't know if a lot of the rent protections are national, or are they just state by state?
That's a really good question, actually. And, right now it is state by state. There's not much of a federal mandate. Each state is kind of determining what they're going to do. There is an eviction moratorium right now, as I think most people know, and that does vary state by state and even county by county. Different counties are offering different time frames. Here in California, the moratorium is out until, I believe, July. You simply cannot evict someone for the non-payment of rent. Now, you can still evict them for other misbehaviors. Okay, so and if you are a renter here in California, please continue to pay your rent if you can. It's because if you don't pay your rent, then you are putting your landlord in a position where they may not be able to pay their mortgage. And this is how the flow of money comes around to all of us. If the mortgage doesn't get paid, the bank now does not have liquidity to extend for loans to other people who need loans, maybe small businesses who are trying to keep employees employed, things like that. So we all have to do our part. If you can continue to pay your rent, please do. But if you can't, then I think the communication factor comes in again in a similar manner to how you'd communicate with your soon-to-be ex. And, Kate, you gave some great points there on how to communicate with others and really get a favorable response and have everybody at the end wind up being maybe 80% happy, not 100%, but get to a place where we can all live with it, at least until we can get a more permanent resolve in place.
And it's important to note too that, just because there's a moratorium on evictions, that's not a moratorium on your rent. And
correct,
whatever rent you don't pay, you are required to pay back. So if you don't pay rent for 2 months, when you get a paycheck, you're going to have to pay back rent. And sure, you're going to be able to, work out something with your landlords, hopefully a payment plan. But what that essentially shakes out to is you're going to have to pay more in rent.
Absolutely.
And that's
absolutely.
Yeah. So we want to avoid that if at all possible. And
absolutely,
with the knowledge that if you need it, it's there.
Mm-hmm. Yep.
Right?
And it's important to note also that, as this situation is evolving, day by day, the date of our conversation, today, Kate, which is
right.
it's the 21st of May that we're having this discussion. So all of this is the case today. Things could change. Lenders could suddenly change their terms for forbearance. Credit card companies could suddenly change the way they're doing things. We don't have any indication of that yet, but that always could happen. So again, no time like the present to really get your arms around your situation and start to deal with it, because it is not your fault at all that you find yourself in the situation, but you do have a lot of responsibility toward yourself and your children and your ex, if they're dependent on you, to do everything you can today to make sure that your boat is still floating as we go through this pandemic. So there's a lot you can do today. So just focus on what you can do and do not feel guilty, ashamed, or embarrassed about the things that have happened to you as a result of this wild time.
Yeah. And I want to know, I'm curious, a lot of these programs are, they do specify sort of in the small print, like, if you're having trouble, as a result of coronavirus, right? So people who are just having trouble or haven't been employed for 6 months or like, other than that, like, are they able to take advantage of these programs? And
very possibly, because here's the thing, Kate, if you're unemployed and you've been looking for work for, let's say, a year, let's go way back before the coronavirus. Well, this pandemic is certainly hampering your ability today. Certainly.
That's true.
So,
right. It's not like you're going to get right. Exactly.
Exactly. So, if you've been looking for a job, or if you even had a job lined up, a lot of employers are actually rescinding offers right now because they're worried about their own future and their ability to pay. So, here's the key though. You'll never know if you don't ask. So a lot of times here, they're going to want to see a direct relation to your circumstance and the coronavirus pandemic. But the tendrils of this pandemic are reaching around absolutely every portion of our lives. So in terms of what you need to provide in terms of proof, I think that there's quite a bit that you can provide. Even if you can't tie it directly back, there's probably a series of events that ultimately lead back to this pandemic. And certainly, if you are relying on spousal support or child support, and your spouse has a COVID-19 related crisis with his or her work, you can show the courts that. You can show the lenders that. You can show them bank statements of alimony and child support that is not coming in. And there's a lot that you can do. And speaking to your lender and finding out exactly what that proof is, exactly what they're looking for is key. Getting educated right now so that when you do find yourself in a, crisis situation, maybe your alimony is still coming in now, but in a month it won't be. So, just thinking ahead and thinking about where you're vulnerable and trying to get your arms around that now and come up with a game plan for moving forward. We should probably talk a little bit about auto loans and student loans here too, because sure. I know that that's a really big thing for people. Just one more, piece of debt that it's coming in every single month. And
fucking bill.
Exactly. That's exactly. You just summed it up beautifully. You summed it up. The bills don't stop. And, and auto loans and student loans, that's the installment kind of debt, where we have monthly payments that we have to make and whatnot. But, if you have a lease right now, you may want to talk to your dealership and find out exactly what options are for either getting out of your lease or renewing your lease. A lot of people that have leases coming up, they can extend by 6 months for a pretty reasonable fee, because a lot of dealerships, they know that people are not coming in to test drive cars right now. So if you're concerned about your lease coming up, just call the dealership. But many auto lenders are offering various kinds of relief. And so if you have a traditional auto loan, reach out to the lender. A lot of them are creating programs to help customers by delaying payments until the worst of this pandemic is behind us. Nearly every automaker, plus the banks and credit unions, are allowing customers to defer payments with no late fees. Most will not report any negative information to credit bureaus during this time either. So
that's an important point.
Yeah, exactly.
Right? That's really important because good.
And one more thing, if you've got a warranty on your vehicle that, let's say it expires in July or August, and you've got some work on the car that needs to be done, many car dealerships and manufacturers are extending those warranties for their clients to give them more time to get in and get those costly, repairs done. Although they wouldn't cost you under the warranty, of course, but there may not be enough technicians to service all the vehicles. So inquire about whether or not your warranty is being extended also, if you've got something with your car that needs to be looked at.
Okay. And we should clarify that that's not like one of those extended warranties that they try to sell you when they sell you your car.
Correct.
It's an extension of the actual warranty.
Of the current one, the one you either already paid for or came with your new vehicle.
Exactly.
So, call them and just find out. And even if your dealership is not really offering that, just ask. It's amazing what you might get if you just ask. Just ask for an additional 3 months because of what's going on, and let them know that you're not driving the car because you're not going into work. And so it's just, it's really just sitting there, and it's, nothing's changing on it, but you need 3 more months. They may give it to you.
That's great.
So you'll never know if you don't ask.
Right.
But,
so what about student loans? Were you about them? Yeah.
Student loans are weighing heavily on everyone's minds. And it has been for, quite a while. This has been a popular topic, especially as we are moving toward a presidential election at the end of this year. And the campaigning.
Are we? I hadn't heard about that.
Well, Kate, this quarantine is just not, it's not been good for the information sharing, at least not the accurate information sharing. There's been a lot of fake news, but yes, and the campaigning this year, of course, has been, it's been the Democrats that have been campaigning this year. So we've gotten to see a lot of different ideas and things like that coming from our Democratic candidates this year, which was really, really nice. And student loans was really at the top of everybody's list in terms of what to talk about and how they want to help people. And, in student loans, again, if you're going through a divorce right now, you may want to inquire to your attorney about your ex-spouse's student loans if they were for education that they received. Whether or not this is community, it can be a confusing process to find out if this is community debt or not, depending on when exactly the debt was incurred. And, if your ex-spouse, let's say, has debt from a law degree that you've been benefiting from for the last 10 years, that comes into play as well. So, So make sure you check with your attorney on what exactly you're responsible for in terms of your ex's student loans. But
what about if you supported the, your spouse as they went through school, right?
Yep.
Like do they take those kinds of things into consideration? Like
they do.
Okay. Yeah.
They do. Yeah. They do take those things into consideration. So, again, when it comes to your divorce, absolutely everything is in play. That's why documentation is so important. Mm-hmm. And so, you if you're in the middle of the divorce, it's still unclear who's going to be taking what debt, what assets, all of that. So you may want to just check in with your attorney. But at the same time, again, we definitely don't want these debts going unpaid. So we don't want to find out later what the consequences are of the unpaid debt. So, let's just try to be making our installment payments and our minimums as best we can.
Yes. And you don't want to assume that that was his debt, so I'm not going to make payments on it. And then come to find out 6 months down the road that your credit was affected by that.
Absolutely. Absolutely. And further, if you're making payments on, let's say, his student debt, and it shakes out in the end that that's not actually your debt, then if you can document that and show your attorney where you were making those payments, that could be settled upon in the final decree. It could be that, those debts suddenly wind up on his side of the balance sheet and you wind up getting a little bit more of the estate because you made those debt payments. Again, no promises there. It varies state by state. Your attorney is the only one that's going to really be able to counsel you there. But just keep that in mind if it's really causing you a lot of nausea to pay what you consider to be someone else's debt. So just, again, document everything and talk to your attorney. But having debts go unpaid and finding out later who's responsible, not usually the best plan. Okay.
I mean, it is so smart, and it's so true, and it's so important. And I also want to say, it's brought something to mind, which I actually have been not guilty, because it's not nothing to feel guilty about, but it's something that I've done over the past with my ex, where I'll just be like, oh, let's take, for example, my son's orthodontist, right? And we're splitting the cost of his orthodontist. And so I said, why don't you just pay the bill and then just take out my half from my support payment every month?
Okay.
Which, totally fine, right? But what I realized is that I don't have documentation.
Correct. I was going to say
the orthodontist.
Correct.
What I have is that I received less support, but I have no documentation that I paid the orthodontist.
Correct.
And when I was doing my taxes this year, I realized, I was like, oh shit, look at that. And I'm claiming it, and I'm hoping I don't ask to be audited, this year. Mm-hmm. But that's how you document, right? You don't just subtract from here, subtract from there, or just like, you want to write the check yourself to the place that the check is going.
Correct. Yep. And you brought up something that's really important, by the way, and something that is very confusing to a lot of spouses that are, post-divorce, settled into their alimony and child support routine. The fact that you paid the orthodontist bill, or I'm sorry, that your ex-husband did, and then he gave you less support as a result. If you don't have an email where he is saying, by the way, the reason why the support is less is because I paid this orthodontist bill, you actually later on, Kate, could go back and say, that was never our agreement. Even though he's got the bill that he paid, I never agreed that he could take that out of my support, And so you actually would have possibly a case against him for not paying his full alimony. So especially if you're the payer and you're going to pay a bill and deduct it from support. Not
a smart idea, right?
Yeah, you've got to have agreement in writing from the parties that you can show later on, because, the courts have not agreed that you can just, fudge around on bills and then change the alimony to match that. It should be a rare thing where this happens, but it always must be in an email that the bill that I paid was meant to represent partial support during the month of June or whatever it was.
Yeah.
So
ours was it was 2 years, right? I mean, that was
Yeah.
So, I mean, it's interesting. I mean, obviously my ex and I, that's not an issue. I would never do that. I would never do a bait and switch on him like that. That's shitty.
Right. And you're in a good place. You're right. And you two,
absolutely.
I admire the way you two have worked through a lot of your issues financially. You're just a great example to the rest of us here. That's terrific. And it's one of those things where it's not a problem until it's a problem, kind of a thing. So, so it may be if you're not in a great place with your ex, or you think that there could be choppy waters ahead, just whatever that may mean, it's just good to have it in writing.
It's 100%. No, you're so right. Yep. You're so right.
Yep, absolutely. So, but student loans, just to tie a bow around that really quick, there's a lot going on right now with student loans that could be an advantage. The federal student loan debt payments right now, they're suspended until September 30th. Okay. And that's a federal thing, not a state thing. Okay. So whatever state you're in, that's the case, suspended until September 30th without accruing interest and penalties. So this policy does not apply to private student loans. Okay. I've got to be real clear about that. If you got a loan from a private lender, this is not the case. Okay.
Yeah.
So please call that private lender. But, various things that lenders are doing. You can get a new repayment plan. There are income-driven repayment plans right now at a portion of your discretionary income where you show them what your income is, and then they will cap it at 10 to 20% of your income and call that your payment, at least for the time being. So if you were making, if you were making 80 grand a year and now you're making 60, for example, you can go in and explain that to them and try to get one of these income-driven repayment caps in place. Lenders have been doing that. If it's a federal loan, in some cases, they may forgive the balance after 20 to 25 years of on-time payments under this income-driven repayment plan. So that could be worth it. And the reason, again, Kate, why I brought up the election with all the different ideas on student loans is that I've been hearing from a few of my clients and a lot of their kids, actually, can I just stop paying on my student loan? Because what if one of the candidates that's talking about forgiving the loans or totally restructuring gets in? I don't want to, be wasting good money today on those loans when I could have them forgiven or partially forgiven by next year if someone else gets into the White House. I can't stress enough that that's just not the way.
Abide by the current law until longer law.
Correct. Because getting behind on these payments, even if we did have a new regime next year and new laws surrounding student debt,
let's not call the new one a regime.
I know, right?
This one we can call a regime.
Yeah, when we get a new sheriff in the station, how about that? New sheriff.
When we get an actual president. How about
exactly. That? When we have a new functioning, any functioning adult, as they say, coming in, we don't know what's going to change, and I must say, it's possible they wouldn't look very favorably on the ones that did not keep current, and they may not have as attractive of a resolution for those debts as they might for people who continued to meet their obligation. So
right, like don't consider it like a sweeping thing that they're not going to actually like take a look at individual case history. Right?
Correct. Yeah. It's just, good behavior is just always a good idea. So please, keep making those payments, but you can also request a forbearance on student loans as well, because again, this is about what to do if you're finding yourself with no other option and debt is kind of swallowing you up during this crazy time. So, this is immediate and temporary relief, a forbearance. And, while the payments are paused on the federal debt, interest does not accrue. Check with your private lender and see what their terms of forbearance are. But a lot of private lenders are getting in on the action as well and trying to provide a solution, for their borrowers. Deferment is yet another option. So if you lost your job or have had your hours cut back, you may qualify for an unemployment deferment or economic hardship deferment. Federally, you can defer for up to 36 months if you qualify. That's 3 years.
Wow.
Buy yourself 3 years to get back on track. And again, the private lenders, they're all doing what they can as well. They want to work with people. They want to make sure that you are staying solvent and able to meet your debt obligations. So they're offering some things too. And if your school debt is just totally unmanageable, even with all of these options, you can always look into refinancing. But unlike a mortgage where we are, refinancing a home, if you refinance student debt, all lenders are not created equal. If you're refinancing from federal debt to a private lender, do not be enticed by their lower interest rate. Okay, because there are a lot of other things that go along with a private lender versus a federal. The interest rate might be lower, but the new lender may not offer the same benefits. So you could lose the federal protections like the income-driven repayment plans, forgiveness programs, the more attractive forbearance and deferment options. The federal loans tend to be a lot more flexible than the private loans. So just be very careful if you're refinancing from federal to private.
That's a good point. That's a great point. God, you're such a wealth of information. It's crazy.
Well, I mean, at this point, we've seen just about everything when it comes to all of this. And, just because we are financial planners and manage, wealth for a lot of clients, that doesn't mean that these things don't pop up from time to time. And, I think that managing debt is just as important as managing assets. Debt and interest rates and all of these things are a real threat to wealth and a threat to your emergency fund and everything else. So that's why it starts here, really. So,
yes. And I want to say, right, that like, that doesn't mean like, I don't want to stigmatize debt because most of us are in debt
Absolutely.
Because capitalism and the way that our system is structured, our financial system is structured, most of us, maybe not most, but a huge portion of people do not make enough to survive. The federal minimum wage is not enough for
Right.
to live on. Like, period. End of discussion.
Yep.
So it's either second, third jobs, and or debt. So that is, it is unfortunately a reality for so many Americans. And, for people who are listening in other countries, I have a lot of listeners in the UK and Australia who are like, what? It's like, we know.
Right. Yeah.
But, it is what it is. Right. So, and if we're drowning, it's, that's the design, and it's awful, and it's so stressful. And, so these are some ways that, we're talking about that can alleviate that. I just want to point out that, like, we're almost all of us are in debt in some.
Absolutely. And debt is not bad. Debt is not a bad, it's a 4-letter word, but it's not one of those 4-letter words. Debt is not a bad thing. Debt is a great way for us to, structure purchases and things like that. What is not good is being in debt to the point where you don't really have a repayment plan.
Right.
If you don't really have a manageable way to continue to service the debt, and what do I mean by servicing the debt? Just to make the monthly payment or to get it paid off in a timely fashion. You should never take out debt on a credit card or a revolving structure, for example, and just plan to make the minimum payments. That's not a good plan.
And now they are federally mandated to put how long, like, if you look at your statement on the front page of your statement, it's now law that they have to tell you how long it will take you to pay off your debt if you only pay the minimum.
That's true. And that's such a great thing, because I think that a lot of people just don't really understand how that works. They think, well, if I pay the minimum payment, how long could it possibly be before I finally, if they're willing to accept this as the minimum payment, then they're not going to wait 36 years for me to pay this back. But
yes, they will, because they're getting, at 26% interest, they're more than happy for it to take you.
Absolutely. They are more than happy. Absolutely. And, a quick word too about zero interest credit cards. It's okay to move high interest debt to a zero interest credit card, but make sure you understand the terms, because if it's like a no interest for 12 months, for example, and you miss one of the monthly minimum payments, then they actually will charge a very high rate of interest back from day one, of the loan. Back from day one, they can do that. So make sure that you really read those terms and understand, because, it's a great thing to do. Go to zero interest if you can only make the minimum payment right now. But if you can't make the minimum payment even, then this is going to be no good for you, because it's probably going to be even a higher rate of interest than under the new credit card if you miss one of the payments. So
yes. What do you think of debt consolidation?
Debt consolidation is a great thing. If you can refinance to a lower rate and with terms that you can live with, it's a great thing. But again, a cautionary note. When you do the consolidation, make sure you understand what assets are collateralizing that debt. You wouldn't necessarily want to, change if your home is being collateralized by a loan. You don't necessarily want to take credit card debt and now move that onto the home. For example, credit card debt is a different kind of debt. A home loan, same thing. But talking to a specialist and explaining your situation and seeing what they have to offer is always a great idea. Consolidating revolving debt onto a zero interest credit card that is also revolving and is not attached to any of your assets, that's just fine. Taking out a line of credit, and paying off higher interest rate debt, that's also a good idea, so long as you have the repayment plan. Again, if you are a homeowner and you're drowning in credit card debt, filing for bankruptcy won't be a great option for you, because you'd lose the home. But, just be careful what assets are collateralizing what debt as you're thinking through your restructure.
Awesome. Well, this is something that I've never heard of before, and that now suddenly I'm hearing about. What is negative? What are negative interest rates?
Good question.
So just quickly, if we can, because I know
absolutely, I'm gonna do it quick for you here, Kate. But that's a great question because it's been on everyone's minds because we're hearing that on the news a lot too. So negative interest rates are a very seldom imposed, very drastic measure that central banks take when they fear that the economy could be slipping into a deflationary spiral in which spending is halted, prices drop, we see no corporate profits and no economic growth.
Like now.
So kind of like now. Yeah, I mean, this is exactly the time.
Yeah.
People and businesses tend to hold on to their cash while they wait for the economy to improve. That's no shocker either. But this behavior can weaken the economy even further, and as a lack of spending, cause even further job losses, further lower profits, and prices dropping even further. And all of this reinforces fear, giving consumers even more incentive to hoard, which continues the vicious cycle.
Right.
So, so the cycle goes on and on here, and it kind of creates a hamster wheel of decline that's difficult to reverse. So imposing a negative interest rate is one way that the central bank can try to reverse that trend. It really hasn't happened here in the United States, although T-bill rates did go negative in late March briefly. They quickly reversed and are positive again. But several European countries and Japan have used this tool, even though it's rather unconventional, against their harsh economic times in the last 12 years. So your listeners in the UK, they're probably a little more familiar with this than our US listeners. Mm-hmm. But, negative interest rates does not mean suddenly that you get to be paid for borrowing. Okay.
No,
so
less.
That is not what it means. And so in this debt discussion, if you were hopefully thinking that now you could take on debt and actually be paid to do so,
I was really getting excited about that.
I know exactly, because there's still other types of risk that lenders will tack onto that interest rate for. Credit risk being the main one. We're all human beings. We're credit risks. We are not the central bank. We are not another country with a very strong, solid, sovereign government that can be borrowed from. So interest rates are extremely low for us right now, given that negative interest rates have been a threat and that we're hovering around zero. Here, interest rates on a mortgage, for example, 30-year fixed are at 3.125, 3.25, right in there. If you have good credit, I mean, that is just unbelievably low. So that's really how it applies to us as individuals, Kate. But in terms of your credit card interest and whatnot, very little has changed there. That is the highest credit risk debt interest rate that you're going to see. So if you're an investor, the interest that you're being paid right now for buying bond instruments or buying, fixed income, it's going to be less than historically has been the case. But no one's going to pay you to take on debt, unfortunately.
Bummer.
I know. So there you have it.
Oh my God, Kimberly, such a wealth of information. You're just like this font of incredible information. Thank you so much.
Well, Kate, thank you. And what you do for all your listeners. And, every single day, there's so many emotional things that we're going through as we navigate divorces. And I just love the resources that you're bringing out to this community. So thank you for what you're doing.
Thank you so much. I so appreciate it. And I appreciate you being one of those resources. So where can listeners find you if they want to get in touch? Or
if they go to my firm's website, coastalbridgeadvisors.com, click on the Meet Your Team link. My bio is there. All my contact information is there. I welcome any questions and happy to chat with anybody that has anxiety around their debt load or anything else financial if they just want a second opinion on.
Awesome. That's so great. Thank you so much. So great to talk to you as always.
You too. Thank you so much.
Thanks for tuning in to another episode of the Divorce Survival Guide podcast. If you like what you hear, head on over to Apple Podcasts or wherever you listen in and leave me a review. And don't forget to follow me on Instagram at The Divorce Survival Guide. I'll see you next time, and until then, remember, you, my love, deserve to be happy.